The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Ishares 20-year Treasury bond ETF with the ticker symbol TLT. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So here we have the daily chart for TLT, and I don't remember where I left off last time, but it looks like prices closed on Friday right around the 106.80 level, and prices are currently 5.5 cents up above that. So it's pretty much flat, and I can go over the reasons why we're kind of just seeing this flatness occur in the market versus continuation to the upside or downside. So let's just quickly go over what has happened. So prices were in this previous downtrend right here. It had an overshoot, which can lead to a reversal. This was the overshoot right here, led to a breakout at least, and then even a potential reversal. But you can see that sellers tried to make a new low of this downtrend 2 times. So this is the first attempt, this is the second attempt, and they failed. And bulls made 2 attempts at a new high also. So bears made 2 attempts at a new low, and the bulls made 2 attempts at new high. So this is the first attempt higher. When the bears failed to make the second attempt, the bulls could make theirs. When the bears failed to make a new low after the second attempt lower, the bulls still had one more chance to make a new high because they had one more chance. So this was the chance right here, and now we're just kind of going sideways inside this ranging pattern. So this range is very obvious at this point. You can see that prices go from the highs to lows, lows to the highs. And since prices have not gone to the lows yet, it does look like the bulls might have a chance to see a breakout towards the upside. I'm going to erase these drawings. So you can see that prices go from the highs to the lows and the lows to the highs. So we hit the highs of the range at the 109 level, and we were supposed to go back down to lows at the 99. But it looks like the bears tried 2 times and failed. So this was the first attempt down right here. Prices pulled back, and they were in the formation of the second attempt. But you can see how the EMA is acting as support, and there's a bullish imbalance on this chart. They cannot fill in this gap right here, so it looks pretty strong for the bulls, and there's a potential of getting a breakout towards the upside, maybe even another large leg higher, just like this one right here. So it looks like prices are still in the formation of this leg higher towards the 116 level. And since we had a little 2-legged pullback for this leg, we can probably reach the 114.50 level. So between the 114.50 and 116 level is a potential area after a breakout. Let's see if the breakout can occur. We still got to get past this strong resistance at the 109 level. But it looks like shorts are struggling to bring the market down or the price down. So there's a good chance that we probably see the breakout. I don't know if it's going to be a successful breakout to reach these targets, or it's going to be a failed breakout just to see a spike up and a drop down. We don't know exactly what the market is going to do, but it does look like there's a possibility of getting a breakout to the upside because of the bullish imbalance. The bears tried multiple times to bring it towards the opposite side of the range. They failed, and you can see that the bulls are buying the market up and driving the price higher to hit these stop losses above this swing high right here. So it does look pretty good for the bulls right now, even though I think price can go higher. Is this a place you want to be entering for a long? Probably not, because we have this potential resistance very close by. Maybe this was the area right here with the tight take profit or whatever, but either way, we're very close to resistance, and we might not get that breakout. But I'm leaning towards the breakout because I see signs of weakness for the bears. So that's all I have on the daily chart. Let's go and take a look at the weekly chart. Here's the weekly chart, and you can see that we have 2 consecutive weeks of nice rejection from the EMA. So this looks pretty good. These are tail bars or reversal bars, and you can see how when we see this type of candlestick pattern, even for the top side, we saw these many rejections that led to lower prices. We're seeing rejections on the bottom. It can lead to higher prices, and taking that with the again, that's, you got to take that with a grain of salt. But if you look at the entire context, you know, the market has been dropping for quite a while now, and we're due for a decent sized pullback. So this channel is definitely confirmed, and we just had a break of it. We saw 2 attempts down, they failed, so we're seeing a reversal. We might see 2 large legs up. This is the first large leg. This could be the second one right around the 116 level, and then maybe then we'll probably see 2 large attempts down, or even a retest of these lows. It just takes a while to play out. This low was made in October of last year, so even if we do see 116 level, you know, that doesn't mean the downtrend is over. We can still make 2 large attempts down instead of just 2 small attempts. So the picture gets larger and larger as time progresses. And I'm leaning towards this 116 level because it has very strong significance in the past. And you can see it was support right here in 2015. It was support here in 2017. Support in 2018. There was a failed breakout in 2018, led to a massive rally. Prices started to chop around at this 116 level before dropping down lower, and now we're slowly trickling back to this 116 level. So this level is acting as a magnet. It has meaningfulness to TLT, has strong significance. Traders are recognizing that this level is important, so there's a good chance prices pull back to this level. Again, it's not guaranteed. Everything in the market is attempts to do stuff, and if it fails, we're going to see a reversal to the downside. So even if we do see a breakout, we don't want to see it fail right away. We want to see, you know, aggressive push up higher. But if it fails right away, then the market tried to do it at least, and you know, that's all it could do. So that's usually, you know, you just got to go by what the market can do. It's all just attempts or tries at the end of the day. So it's trying to get to this 116 level. We'll see if it can. I think there is a possibility very shortly to see a retest of those range highs at the 109, or even probably a breakout. So let's see if that occurs next week or in the next coming week. So that's all I have for TLT this week, Saturday, and I'll give you guys an update next week, Saturday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video with your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.